It's April, and you're probably wondering what's going on in the Austin housing market. So, we've got an update for you. We're going to talk about headlines like once America's hottest housing market, Austin is running in reverse. And after seeing a headline like this, which multiple people have mentioned this article to me, you're probably wondering, wait, so prices are going down or are they going up? Well, we're going to answer that for you today. You might be surprised with the result of what's actually happening when we look at the statistics. So I'm David Shapiro, my colleague Lee Abraham from the Shapiro Group here in Austin, Texas, and we're going to also answer: if you're a buyer, what should you be doing? What should you be thinking about? If you're a seller, how's the market looking for you? We've got listings and buyers, and so this is not only a combination of statistics, anecdotes from us and other agents that we're talking to all the time about what's actually happening. So Lee, let's go ahead and dive right in. And we'll start with the number of active listings. This is a good indicator. You can see we go all the way back to the beginning of 2022 when the market was super hot. Sometimes when I ask people about real estate, what do they think is going on in the market? The market's super hot. And, they haven't even been checking in and seeing what's going on because obviously things have changed from early 2022. And so you can see we were as low as 341 listings on the market. That peaked with interest rates, seasonality here when the market picks up in the spring and summer. The winter, it slows down a little bit. You can see that same trend last year, but we're starting to see listings pick back up again, which we did see last April as well. So we're kind of on the same trend. And we're going to talk a little bit more about all these stats.
So David, one of the things that's really fascinating is that even though the number of active listings is up, the monthly housing inventory is down. So these statistics can often be very confusing. They can be used to point the consumer opinion on what the market is doing. But the bottom line is that while the number of active listings are up, the monthly housing inventory is down. So what does that mean? Basically, the number of sales have increased more than the number of new listings hitting the market. And this chart basically gives you the numbers, the 30-day pending sales, which I do believe is something exclusive to the reports that we put out. Most indicators are going off the past 30-day closed sales. Looking at the pending sales really gives us the pulse of the market. 904 pending sales in the past 30 days, David, as compared to the closed sales over the past month, just under 700, 688. When you translate those number of sales per month into the same number of active listings, 2194, you can see based on pending sales, we've got under a 2.5-month inventory. We look at the closed sales over the past month, about a 3.19 month inventory. Looking at this from a fundamental standpoint, as we've mentioned in previous podcasts here, reports, that the balanced market is defined as a 6 to 6.5 month housing inventory. Anything less than that is a strong seller's market, and anything over 6.5 months is a strong buyer's market. You don't want to be in a buyer's market if you're selling property because that typically means prices are going down. We're in a reasonably strong seller's market, so look at the fundamentals. What does that mean? Well, I won't spoil the teaser that you put out there about what's happening with sale prices here in Austin.
Mm-hmm. And so here you can see the 30-day monthly housing inventory over time. It follows a similar trend to the number of new listings. And it looks like we're going to settle kind of in this 3-month range, which is what we did last year in the middle of the year. And, more listings are coming online. It could inch up a little bit, but I don't think we're anticipating this, going as high. I mean, maybe in the winter it goes back up to this 5-month mark. We'll see. But the trend it's been pretty stable over the last year, I think is the key here.
And I think that stability, we're going to talk about mortgage rates in a while here, but I think part of that stability is a optimistic uncertainty. I don't know if I've ever used that phrase before, but I think that there's an optimistic uncertainty as to what's going to happen with the Fed funds rate. And we'll get into some more details, but I think that's really why things have been stable, David, particularly over the past 30 days, 45 days or so.
Yeah. Here we can see the number of sales per month down 4% year over year, up 15% month to month. Any thoughts on this one, Lee, before I go on?
Just an anemic number, generally speaking, overall, and I think there's a lot of room for that to go up. So that's one of the reasons why we remain cautiously optimistic again on the health of our market. So I think there's room for the number of sales to go up and increase the velocity of our market this year in 2024.
Yeah, and I think the nominal number of like, we don't need this number to go up that many sales per month for it to all of a sudden be back to normal range of 2019, 2020, 950 sales, right? So it's a big percentage jump, but not nominally 300 sales in a city of this size every month doesn't really feel like that many. And then here it is, the big reveal. Average sales price is actually up 6.9% year over year. So despite headlines about this market, don't believe everything you read on the internet, I guess is the theme there. The Wall Street Journal is trying to get eyeballs, and that's a catching headline, and lots of people are talking about it. They're doing their job, but they're not really doing a good job of talking about the fundamentals. And what I think they missed in that article is that Austin has grown. A lot of reasons why more people have moved here and why prices have gone up. It's not within a vacuum as to why Austin has appreciated more than other markets in the country. From 2018 to 2023, 66 companies relocated their headquarters to this area. 66 companies. That means more jobs are coming here, means more people, more demand. So it's really not a fair analysis of what's going on in our market. It's a pretty broad article like that that's not really digging into the actual reasons why things are happening. And here the stats show it with year over year price increases.
The numbers don't lie, and so this is another number that we've been paying more attention to than some of the others, which is days to sell. We started the year at 75 days to sell, then 72. Toward the high end of the range that we've seen here in Austin. So in alignment with a strong seller's market that's increasing to strengthen, we have days on market declining. That's another indication of demand exceeding supply and is right in alignment with our forecasts for the rest of these statistics here in the beginning of the second quarter, David. So as we look at the different market indicators, we always refer to sale price, list price ratio as the ultimate reflection of market sentiment. Again, extremely stable. We're looking at a slight increase year over year as well as month to month, kind of moving ever so slowly from that 97% mark, now right at about 98% sale price, list price ratio, another indicator of a strengthening market, David.
And then our famous housing inventory barometer or listing inventory barometer. This is the most real-time stat we have. So you can see the number of new listings each week, the number of pending sales, and this 100% line is what we're looking at. And so you can see areas where there was actually more sales than new listings here and here. But for the most part, and especially over the last 2 months, inventory has been growing. There's been more listings than there have been sales.
So as we look at the mortgage market survey from Freddie Mac, we can see that although the market has been very, very stable, along with some of the other metrics we've been looking at, the 1 week change slightly down from the previous week. So as we get into the second quarter now, the selling season right around the corner, it bodes well for an active market. And so it's good to see that these numbers are softening ever so slightly.
So that covers within the city. So now I think it's really interesting to see the difference with outside of the city. And one stat that's been thrown around a bunch is talking about net migration and how many people are moving where, that the 8 out of 10 people moving to Central Texas are not moving to the city of Austin. They're moving to these suburbs. And people are like, whoa, that people have changed their mind. They don't want to be in Austin anymore. I would say it's not really a matter of that. People still prefer Austin if they can afford it, but it's a matter of affordability, being outside the city limits, this being a growing metro area. And it's just a lot bigger city now than it was 10 years ago. There weren't as many outlying areas and communities and places to move 10 years ago. So it just makes sense as those have grown at a much faster rate because there's a lot more land to develop outside of the city, that there's been now more of room for more people to move outside of Travis County. And generally they use Travis County and the city of Austin somewhat interchangeably because those borders are pretty close to each other. And so I think that's an interesting stat. To me, it just still shows, well, like, okay, 2 out of 10 people are still moving to Austin. There's still people that want to be in the city. It's still the more desirable And if people can afford it, well, I wouldn't say for everybody. Some people like being out with a little bit more space or some of the amenities outside of the city in some of those big master planned communities. Well, let's just take a look at what we've got. So we got 3.24 months of inventory based on pendings, based on sales, 4.17. So a little bit more inventory.
In the number of sales per month, down year over year, up month over month, just over 1,800. Anticipating this number to jump significantly, David, when we are doing our report next month.
And then the sales price up 0.3%. So it's still up, but it's not up the 6.9% that we saw within the city. And the city just tends to hold up better during downturns, recover more quickly, and that's what we're seeing here. And so there's just less competition, right, within the city in terms of you can't build as many new communities as you can outside the city. And so we're seeing that in play right here. Of course, these suburbs offer a lot of value for a lot of people. It's more affordable, and that is a really important thing that we have affordable housing in our metro area. It'd be great if we had more affordable housing within the city limits, and the city's working on that. But this is one other thing that has been done, is that there's more affordable housing outside of the city. And just little a, meaning it's not a program, it's just that it's less expensive for the land and to build. Whereas within the city, they're working on capital A affordable programs where they're actually building stuff where you have to be at a certain limit of income to be able to qualify for reduced rent.
So days on market also down outside the city, much higher as compared to inside the city. That speaks a little bit to the demand in town versus out of town, also the supply that you're competing against. But good to see this number dipping down from the low 80s that we started the year with. Now we're at 72. I'm anticipating that we'll follow some seasonality here, and these should be dwindling a bit over the next few months as the selling season kicks in.
Number of new listings up 14% year over year and 18% month to month. So you can see like the number of listings, and we've talked about this in past months, is already higher, or new listings is higher in 2024 than it was in 2019. There's just more housing stock. There's more homes have been built outside the suburbs. So it just looks a lot different than the numbers within the city.
Sell price, list price ratio. Doesn't matter if you're in town or out of town. This thing is just as consistent as can be. Also moving towards 98%. It's good to see, David. And again, it's just one more data point in alignment with a healthy market that is the Austin MSA.
Yep. So let's talk quickly. All right. If you're a seller and you're thinking, okay, what do I do? We've had a lot of conversations with sellers in different situations over the last month. And it's interesting. If you bought 3 years ago, you probably have equity. You probably can sell your home and take some equity to another property. If you're in a situation where you're selling something you bought in the last year to maybe 2 years, it's a totally different scenario. And that's something that's a little bit more delicate that we'd love to chat with you one-on-one about and see what makes the most sense for you and look at the comps and the numbers and see if there's a way for you to walk away with some money or maybe break even on a property. But generally, we see that depending on your timeline, it might make sense to sell now. If you could wait and you want to wait, we anticipate that the market will improve for some sellers. It really gets into sub-market is the hard thing to talk about because, like we said, we had one listing that we sold over the weekend and our seller was extremely happy with the price they got and just selling in a couple days. And then there's other listings that aren't going to sell as quickly just because the sub-market has an oversupply. And so we really have to look at it on a case-by-case basis. But generally, if you can wait until interest rates come down, you're going to be better off as a seller. But if you have to go buy, then you're going to be competing with more buyers. So it's a two-sided equation and really, takes talking kind of through those. And so even if you're thinking about selling and buying in a year from now and you want to talk about what that might look like, please reach out to us. We'd be happy to walk you through that. And then for buyers, if you don't have a place to sell and you're just out there looking to buy, we think the best opportunity is probably now. We think as interest rates drop, there's going to be more competition in the market. And so it's better to get in now, get the house you want, lock in that. And then you may not have the interest rate you want, but that's okay because you can always refi that later when rates do come down. And you're going to be able to have an easier time shopping right now with less competition, potentially get a better deal. We could be opportunistic, take our time. I just would hate to see somebody wait for interest rates to drop thinking that that's what they need to do. And then there's a lot of competition and things look a lot like they did in early 2022. Maybe not as crazy, but things are definitely going to pick up when interest rates come down, which it looks like people are expecting to be sometime in the middle to the end of this year. And so that gives buyers the summer season to probably take a look and make some opportunistic buys.
Yeah, I think it's very important for people to remember something that we always talk about, which is that it's one thing to look at the market trends and indicators, but every real estate transaction involves typically a unique combination of a buyer and a seller, and that's where the bargain is made. So if it's the right time for you to buy because of your lifestyle, your career, your just life cycle events happening, or selling, same thing, just different side of the coin. Let's have that conversation and really dig into the hyper local market details that are going to impact your pricing, purchasing decisions.
Yeah, and just be careful what you read on the internet with some of these news articles. In terms of like the national ones, they're talking about really broad areas, and real estate gets down to not only the city, but then the submarket. And that's why sometimes, we give some general stats and talk about generalities for Austin, but we really need to dig into your neighborhood and what's going on locally, even more hyper locally. If you got a lot of this video, share it with a friend, give it a like. Go ahead and subscribe to us. You get updated for upcoming videos on market updates and other special reports that we put out. And we appreciate you joining us. Take care.
Thanks, everybody.